Question 1. A homeowner, Mrs. Martinez, has a homeowner's insurance policy with a coverage limit of $300,000. After a severe storm, her home sustains damage amounting to $120,000. However, Mrs. Martinez failed to report a previous claim for water damage which was not fully resolved. What is the most likely outcome regarding Mrs. Martinez's claim for the storm damage? A. The claim will be fully paid because the storm damage is unrelated to the previous claim. B. The claim will be denied due to the failure to report the previous claim. C. The claim will be partially paid, but the previous claim may affect the payout. D. The claim will be delayed while further investigations into the previous claim are conducted. Answer: B. The claim will be denied due to the failure to report the previous claim. Explanation: in California, insurance contracts are based on the principle of utmost good faith, uberrima fides. This means that policyholders must disclose all material facts when applying for insurance and when making claims. The failure to report a previous claim can be considered a breach of the duty to disclose material facts, which may lead to denial of the current claim. According to the California Insurance Code, particularly Section 1914, an insurer may rescind a policy if the insured knowingly concealed or misrepresented material information. Therefore, Mrs. Martinez's omission may cause her storm damage claim to be denied. Question 2. Which of the following statements best describes the concept of replacement cost in property insurance? A. Replacement cost is the amount necessary to repair or replace damaged property with new property of like kind and quality, without depreciation. B. Replacement cost is the current market value of the property minus depreciation based on its age and condition. C. Replacement cost is the value determined by the insurance company at the time of policy issuance. D. Replacement cost is the total cost incurred by the insured to restore the property to its original condition, including improvements. Answer: A. Replacement cost is the amount necessary to repair or replace damaged property with new property of like kind and quality, without depreciation. Explanation: Replacement cost coverage provides compensation for the actual cost of replacing damaged property without considering depreciation. This means that if an insured property is destroyed, the insured would receive enough funds to replace it with a new item of similar kind and quality. This is distinct from actual cash value (SEV), which takes depreciation into account. According to industry standards and the California Department of Insurance guidelines, understanding replacement cost is crucial for adjusters to accurately assess claims and ensure that policyholders receive fair compensation. Question 3. Scenario-based. During a routine claims investigation, an adjuster, Mr. Thompson, discovers that the claimant, Mr. Johnson, has submitted receipts for repairs that appear to be inflated. The receipts show charges for high-end materials that were not used in the repairs of the damaged property. What should Mr. Thompson do in this situation? A. Accept the receipts as they are and proceed with the claim payment to maintain a good relationship with the claimant. B. Investigate further by contacting the repair contractor to verify the charges before making a determination on the claim. C. Deny the claim immediately based on the assumption of fraudulent activity without further investigation. D. Inform Mr. Johnson that his claim will be delayed due to discrepancies in the submitted receipts. Answer: B. Investigate further by contacting the repair contractor to verify the charges before making a determination on the claim. Explanation: in claims handling, particularly under California's Fair Claims Settlement Practices regulations, it is imperative for adjusters to thoroughly investigate any discrepancies before reaching a conclusion. Mr. Thompson's discovery of potentially inflated receipts indicates a need for further inquiry. He should contact the repair contractor to validate the legitimacy of the charges. According to California Code of Regulations Title 10, Section 2695.7, insurers must conduct a diligent investigation and avoid arbitrary denials or delays. Proper investigation is crucial not only for maintaining ethical standards but also for ensuring that the claims process is fair and just for all parties involved. Question 4. Which of the following best describes the principle of indemnity in insurance? A. It is the legal obligation to provide financial compensation for losses suffered by the insured. B. It ensures that an insured party is placed in the same financial position after a loss as they were before the loss occurred. C. It refers to the maximum amount an insurer will pay for a covered loss. D. It is the process of estimating the value of damaged property based on its current market value. Answer: B. It ensures that an insured party is placed in the same financial position after a loss as they were before the loss occurred. Explanation: the principle of indemnity is fundamental in insurance, aiming to restore the insured to their financial state prior to a loss without allowing them to profit from the insurance. This principle prevents moral hazard, where insured parties might take undue risks because they are covered. According to the California Insurance Code, Section 2501, the indemnity principle is critical to ensuring that insurance contracts operate fairly and responsibly, emphasizing the idea that the purpose of insurance is to provide protection against loss rather than to serve as a profit-making tool. Question 5. In California, what is a common reason for the denial of a property insurance claim related to natural disasters? A. The property was not insured against acts of God. B. The claim was not filed within the required time frame. C. The insured did not have sufficient coverage limits. D. The damages were below the deductible amount. Answer: B. The claim was not filed within the required time frame. Explanation: timely filing of claims is crucial in insurance practices as outlined in California Insurance Code Section 2071, which states that policyholders must promptly notify their insurer of a loss. Failing to file a claim within the time frame specified in the policy can result in denial. Additionally, while exclusions for specific types of losses like floods or earthquakes may apply, it is the timely reporting of the claim that often leads to denial. It is essential for adjusters to communicate these requirements clearly to policyholders to prevent potential disputes. Question 6. Mr. Anderson is a claims adjuster handling a claim for a client who sustained injuries in a slip and fall incident at a grocery store. The store owner asserts that they should not be liable because they had recently mopped the floor and placed warning signs. What should Mr. Anderson consider when determining liability in this case? A. Whether the store owner provided adequate warnings to the customers. B. Whether the client was acting in a reasonable manner at the time of the incident. C. Whether the floor was truly slippery at the time of the accident. D. All of the above. Answer: D. All of the above. Explanation: in evaluating liability in slip and fall cases, multiple factors must be assessed. Under California tort law, particularly, the concept of negligence liability may hinge on whether the store owner took reasonable steps to maintain a safe environment, including providing warnings about potential hazards. Adjusters must consider whether the warnings were adequate, whether the injured party was acting reasonably, and whether the hazard was present and created a foreseeable risk. Each of these aspects plays a role in establishing whether negligence occurred, as described in California Civil Code Section 1714, which governs the duty of care owed to others. Question 7. When evaluating a property damage claim, an adjuster must determine whether the loss is covered under the insured's policy. Which of the following actions is essential in this evaluation? A. Comparing the claimed loss against similar past claims for consistency. B. Reviewing the policy's coverage limits and exclusions. C. Estimating the potential future value of the property. D. Consulting with the insured about their expectations regarding compensation. Answer: B. Reviewing the policy's coverage limits and exclusions. Explanation: to accurately assess a property damage claim, it is crucial for an adjuster to review the terms of the insurance policy, specifically the coverage limits and any exclusions. The policy defines what losses are covered and under what circumstances, which is essential for determining the adjuster's liability and paying the claim. According to the California Department of Insurance guidelines, an adjuster must ensure compliance with the Fair Claims Settlement Practices regulations, which mandate clear communication of coverage specifics to the insured. Question 8. A client is upset after receiving a lower settlement offer than expected for their auto accident claim. What must the adjuster ensure is included in their communication to the client to promote transparency? A. The adjuster's personal opinion about the claim's value. B. A detailed breakdown of how the settlement amount was determined. C. Information about the adjuster's performance metrics and bonuses. D. A reminder of the client's obligations under the insurance contract. Answer: B. A detailed breakdown of how the settlement amount was determined. Explanation: transparency in the claims process is critical to maintaining trust and mitigating disputes. Adjusters should provide clients with a clear explanation of how the settlement amount was calculated, including details such as the assessment of damages, application of deductibles, and any applicable policy limits. California's Fair Claims Settlement Practices regulations emphasize that insurers must not only handle claims fairly but also communicate effectively with policyholders regarding claim determinations. This clarity helps in ensuring clients understand the rationale behind settlement offers, reducing potential conflicts. Question 9. What is the primary difference between a occurrence and a claims-made insurance policies in liability coverage? A. An occurrence policy covers claims that happen during the policy period, while a claims-made policy covers claims reported during the policy period. B. An occurrence policy is more expensive than a claims-made policy because it offers broader coverage. C. A claims-made policy only covers claims for incidents that occur after the policy has been issued. D. An occurrence policy provides coverage for specific events, while a claims-made policy covers any claim during its term. Answer A. An occurrence policy covers claims that happen during the policy period, while a claims-made policy covers claims reported during the policy period. Explanation. The distinction between occurrence and claims-made policies is vital for adjusters to understand, as it significantly impacts coverage and claims handling. An occurrence policy provides coverage for any incident that occurs during the policy period, regardless of when the claim is filed, offering long-term protection for insured events. In contrast, a claims-made policy only covers claims reported within the policy period, meaning that if an incident occurs but is not reported until after the policy expires, coverage may not be available. This differentiation is crucial in determining liability and coverage in claims investigations and is governed by California's insurance regulations, which require clear definitions in insurance contracts to avoid ambiguity. Question 10. Mr. Smith, a claims adjuster, has been assigned to handle a fire damage claim where the insured has provided photographs of the damage, but they are not dated. What is Mr. Smith's best course of action regarding the photographs? A. Accept the photographs as valid evidence of damage. B. Request additional evidence that includes a date stamp to verify when the damage occurred. C. Use the photographs as the sole basis for determining the claim amount. D. Disregard the photographs and rely solely on the insured's statements. Answer. B. Request additional evidence that includes a date stamp to verify when the damage occurred. Explanation. In claims adjusting, it is essential to establish the timeline of the damage to correlate it with the insurance policy and the event that triggered the claim. Photographs without date stamps may not sufficiently prove when the damage occurred, which is necessary to validate the claim under the terms of the policy. According to California's Fair Claims Settlement Practices regulations, adjusters are required to conduct thorough investigations, including seeking additional evidence to support the claim. Mr. Smith should request documentation or additional evidence to ensure that the claim is processed accurately and fairly, adhering to the standards expected in the industry. Question 11. In California, an insurer is required to notify a policyholder of a claim denial. What must be included in this notification to comply with regulations? A. The specific reasons for the denial and references to relevant policy provisions. B. An apology for any inconvenience caused by the claim denial. C. A suggestion for legal action against the insurer. D. A list of alternative insurance providers. Answer A. The specific reasons for the denial and references to relevant policy provisions. Explanation. California law mandates that when a claim is denied, the insurer must provide the policyholder with a written notification that includes specific reasons for the denial, along with citations of the relevant policy provisions that support the decision. This requirement is outlined in the Fair Claims Settlement Practices regulations, which aim to ensure transparency and fairness in the claims process. Providing detailed information helps policyholders understand the basis of the denial and gives them an opportunity to address any issues or disputes. Question 12. Which of the following scenarios best illustrates the concept of insurable interest? A. A neighbor is concerned about the potential for flooding on their property and wants to insure the neighbor's house. B. An individual takes out a life insurance policy on a business partner's life. C. A homeowner decides to insure a vacant property that they plan to sell in the future. D. A tenant obtains renter's insurance for a friend's apartment without the owner's knowledge. Answer. B. An individual takes out a life insurance policy on a business partner's life. Explanation. Insurable interest refers to the legal right to insure an item or person based on a substantial interest in the preservation and safety of that entity. Under California Insurance Code Section 281, an individual must have an insurable interest in the subject matter of the insurance at the time the policy is issued. In this case, the business partner relationship indicates a financial stake in the partner's life, making it a valid insurable interest. The other scenarios do not demonstrate a legitimate insurable interest, as the parties involved lack a financial stake or relationship that would justify the insurance. Question 13. A claims adjuster is evaluating a homeowner's insurance claim for water damage resulting from a burst pipe. What is the most critical factor to consider when determining coverage for this claim? A. Whether the pipe was old and needed replacement. B. Whether the damage was sudden and accidental or a result of neglect. C. The estimated cost of repairs to the property. D. The policyholder's history of previous claims. Answer. B. Whether the damage was sudden and accidental or a result of neglect. Explanation. Insurance policies generally cover sudden and accidental damage, but often exclude damages resulting from neglect or lack of maintenance. In this scenario, the adjuster must determine whether the burst pipe was due to an unforeseen incident or a lack of regular upkeep, which would influence the coverage decision. California Insurance Code Section 2071 states that homeowners' insurance policies must include provisions for sudden and accidental loss. Understanding this distinction is essential for adjusters when assessing claims to ensure compliance with policy terms and fair treatment of policyholders. Question 14. In evaluating a claim for commercial property insurance, an adjuster discovers that the insured property was not maintained as stipulated in the insurance policy. How might this affect the claim's outcome? A. The claim will be automatically denied regardless of circumstances. B. The adjuster will assess the level of neglect and determine if it contributed to the loss. C. The insurer can still claim full coverage if they argue the damages were unavoidable. D. The insurer will offer a settlement that covers only half of the damages. Answer. B. The adjuster will assess the level of neglect and determine if it contributed to the loss. Explanation. While the insured's failure to maintain the property may not automatically result in a denial, it is crucial for the adjuster to evaluate how this neglect influenced the loss. California Insurance Code Section 2071 allows insurers to deny claims based on policy exclusions related to neglect. The adjuster must gather evidence and assess whether the insured's lack of maintenance directly contributed to the damages sustained. This thorough investigation is necessary to uphold fair claims handling practices and to determine the appropriate response based on the policy's terms. Question 15. Mr. Patel has received multiple complaints about delays in processing claims. As an adjuster, what is the best practice to mitigate these complaints and maintain client satisfaction? A. Increase the number of claims you handle per day to speed up processing. B. Communicate proactively with clients regarding their claims status and any delays. C. Ignore complaints if the delays are within industry norms. D. Assign blame for delays to other departments involved in the claims process. Answer. B. Communicate proactively with clients regarding their claim status and any delays. Explanation. Effective communication is critical in claims adjusting, especially when delays occur. Proactively informing clients about their claim status and any issues that may cause delays helps build trust and transparency. The California Department of Insurance emphasizes the importance of clear communication in the Fair Claims Settlement Practices regulations, which state that insurers must keep claimants informed about the status of their claims. This practice not only improves client satisfaction but also mitigates potential disputes and enhances the insurer's reputation. Question 16. A policyholder submits a claim for damage due to an earthquake, but their policy has a specific exclusion for earthquake coverage. What should the adjuster do in this situation? A. Deny the claim based on the exclusion in the policy. B. Provide the policyholder with information on obtaining earthquake insurance in the future. C. Offer a partial payment based on the estimated damage costs. D. Advise the policyholder to file a claim with their auto insurance provider instead. Answer. A. Deny the claim based on the exclusion in the policy. Explanation. If a policy explicitly excludes coverage for certain types of damage, such as that caused by earthquakes, the adjuster must deny the claim based on the terms of the insurance policy. California Insurance Code Section 10081 allows insurers to include exclusions in their policies provided they are clearly stated. It is essential for adjusters to uphold the terms of the contract while communicating these exclusions to the policyholder to ensure they understand why the claim is being denied. This adherence to policy provisions is crucial for compliance and effective claims handling. Question 17. Which of the following best describes the actual cash value received method of property valuation in insurance? A. The cost to replace an item with a new one of similar kind and quality. B. The original purchase price of the property without depreciation. C. The current market value of the property minus depreciation. D. The estimated cost to repair the property regardless of depreciation. Answer: C. The current market value of the property minus depreciation. Explanation: the actual cash value (ACV) method determines the value of a property by taking its replacement cost and subtracting depreciation. This method reflects the current market value of the property considering factors such as age and wear and tear. According to California Insurance Code Section 2071, insurers must define the method of valuation in their policies. Understanding ACV is vital for adjusters as they assess damages and calculate settlements, ensuring that they provide fair compensation aligned with the policy's valuation method. Question 18. A homeowner has made a claim for theft of personal property. What is the adjuster's primary responsibility when investigating this claim? A. To determine if the theft actually occurred. B. To assess the value of the stolen items. C. To ensure that the police report has been filed. D. To question the insured's character and past behavior. Answer: C. To ensure that the police report has been filed. Explanation: when investigating theft claims, one of the adjuster's key responsibilities is to confirm that a police report has been filed, as this documentation is critical for validating the claim. California Insurance Code Section 2071 encourages insurers to seek corroborating evidence in claims involving theft. Additionally, the police report serves as an official record of the incident, which helps substantiate the policyholder's claim. While assessing the value of stolen items and the legitimacy of the claim is essential, ensuring the report's filing is a fundamental step in the investigative process. Question 19. Under California law, which of the following practices is considered an unfair claims settlement practice? A. Delaying payment of a claim without a valid reason. B. Providing policyholders with a comprehensive explanation of coverage. C. Requesting additional information to support a claim. D. Settling claims promptly when liability is clear. Answer: A. Delaying payment of a claim without a valid reason. Explanation: delaying payment without just cause constitutes an unfair claims settlement practice under California's Fair Claims Settlement Practices regulations. Insurers must process claims in a timely manner, and unjustified delays can lead to significant legal repercussions for the insurer. According to California Insurance Code Section 790.3, insurers are prohibited from engaging in unfair practices that harm policyholders, which includes unnecessary delays in claim resolution. Adjusters must ensure they adhere to these regulations to uphold their ethical responsibilities and the integrity of the claims process. Question 20. What is a key factor that differentiates general liability insurance from professional liability insurance? A. General liability insurance covers bodily injury and property damage, while professional liability insurance covers errors and omissions in professional services. B. General liability insurance is mandatory for all businesses, while professional liability insurance is optional. C. Professional liability insurance has a higher coverage limit than general liability insurance. D. General liability insurance covers claims arising from criminal activity, while professional liability insurance does not. Answer: A. General liability insurance covers bodily injury and property damage, while professional liability insurance covers errors and omissions in professional services. Explanation: the primary distinction between general liability insurance and professional liability insurance lies in what they cover. General liability insurance typically protects businesses against claims of bodily injury, property damage, and personal injury that occur on their premises or as a result of their operations. In contrast, professional liability insurance, often referred to as errors and omissions insurance, protects professionals against claims arising from negligence, mistakes, or failure to perform their professional duties. This differentiation is critical for businesses and professionals to ensure they have appropriate coverage for the specific risks associated with their activities. Question 21. Which of the following is true regarding the principle of indemnity in insurance? A. It allows the insured to profit from a loss. B. It ensures the insured is restored to the financial position they were in before the loss occurred. C. It limits coverage to a specific amount, regardless of the actual loss. D. It is only applicable to property insurance. Answer: B. It ensures the insured is restored to the financial position they were in before the loss occurred. Explanation: the principle of indemnity is fundamental in insurance, aiming to prevent the insured from profiting from a loss. Instead, it ensures that they are returned to their pre-loss financial position, neither better nor worse off. This principle applies broadly across different types of insurance, ensuring fairness and reducing moral hazard. Question 22. Which document typically outlines the terms and conditions of an insurance policy? A. Application form. B. Declarations page. C. Endorsement. D. Policy contract. Answer D. Policy contract. Explanation. The policy contract is the foundational document that outlines the terms, conditions, and coverage provided by the insurer. It includes essential information such as coverage limits, deductibles, and exclusions. The declarations page summarizes key aspects of the policy, while endorsements modify the policy contract. Question 23. In California, what is the minimum number of continuing education hours required for license renewal for insurance adjusters? A. 10 hours. B. 20 hours. C. 24 hours. D. 30 hours. Answer C. 24 hours. Explanation. California requires insurance adjusters to complete 24 hours of continuing education every 2 years to maintain their licenses. This ensures that adjusters stay informed about the latest industry standards, regulations, and best practices, promoting competency and professionalism in the field. Question 24. Mr. Thompson, a claims adjuster, has been assigned to evaluate a claim for water damage in a residential property. Upon inspection, he finds that the damage resulted from an unmaintained roof. What should Mr. Thompson consider when determining the coverage for this claim? A. The age of the roof. B. The cause of the water damage and applicable exclusions in the policy. C. The cost of roof replacement. D. The homeowner's previous claims history. Answer B. The cause of the water damage and applicable exclusions in the policy. Explanation. When evaluating a claim, the adjuster must assess the cause of the damage and whether it falls within the coverage limits of the policy. Most homeowner policies exclude damages resulting from lack of maintenance, meaning if the damage was due to an unmaintained roof, the claim could be denied based on policy exclusions. Understanding the specifics of the insurance contract is critical in claims handling. Question 25. What is the primary function of the California Department of Insurance, CDI? A. To regulate insurance rates for all types of insurance. B. To investigate insurance fraud allegations. C. To ensure that insurance companies meet financial solvency requirements and adhere to state regulations. D. To provide insurance coverage for uninsured individuals. Answer C. To ensure that insurance companies meet financial solvency requirements and adhere to state regulations. Explanation. The California Department of Insurance is responsible for regulating the insurance industry in California, ensuring that companies are financially stable and comply with state laws and regulations. This role includes overseeing licensing, examining company practices, and enforcing consumer protection laws. Question 26. Which of the following terms refers to a policy provision that adds coverage or modifies the original terms of the insurance contract? A. Exclusion. B. Endorsement. C. Deductible. D. Premium. Answer B. Endorsement. Explanation. An endorsement is a document that modifies the terms of an insurance policy, often adding coverage for specific risks or changing coverage amounts. Exclusions are specific situations or conditions that are not covered, while a deductible is the amount the insured must pay before coverage kicks in. The premium is the cost of the insurance policy itself. Question 27. Which of the following best describes the term actual cash value received in property insurance? A. The replacement cost of the damaged property without depreciation. B. The market value of the property at the time of loss. C. The original cost of the property minus depreciation. D. The amount of insurance coverage the policyholder selected. Answer C. The original cost of the property minus depreciation. Explanation. Actual cash value (ACV) refers to the value of the property at the time of loss, calculated as the original cost minus depreciation. This method compensates the insured for the current value rather than the replacement cost, which can lead to lower payouts in cases where the property has significantly depreciated. Question 20. In the context of liability insurance, what does the term occurrence refer to? A claim made against the insured after the policy has expired. B. An event that results in bodily injury or property damage. C. A sudden and unexpected incident. D. Any violation of law leading to legal action. Answer B. An event that results in bodily injury or property damage. Explanation. In liability insurance, an occurrence refers to an event that results in bodily injury or property damage during the policy period, regardless of whether it is sudden or continuous. This is crucial in determining coverage under occurrence-based policies, which respond to claims related to events that happen during the policy period. Question 29. Under California law, which of the following practices is considered unfair claims settlement practices? A. Offering a settlement before completing the investigation. B. Denying a claim without conducting a proper investigation. C. Delaying the payment of a valid claim. D. All of the above. Answer: D. All of the above. Explanation: unfair claims settlement practices include a range of behaviors that violate California's Fair Claims Settlement Practices regulations. Offering premature settlements, denying claims without sufficient investigation, and delaying payments without justification are all practices that can harm consumers and are prohibited by law. Question 30. What is the primary purpose of a liability waiver signed by a participant in a recreational activity? A. To guarantee that the participant will not be injured. B. To release the organizer from liability for negligence. C. To ensure the participant is fully informed about all risks. D. To provide insurance coverage to the participant. Answer: B. To release the organizer from liability for negligence. Explanation: a liability waiver is a legal document that participants sign to relinquish their right to sue the organizer for injuries resulting from negligence. While waivers can help protect organizers from liability, they do not guarantee safety or eliminate all risk. Understanding the limits of such waivers is critical for both participants and organizers in recreational activities.